Let's start with something I hear all the time. Is it really possible to get a business loan with bad credit?
So much misinformation out there. The short answer is yes, absolutely. But here's what people do need to understand. When we're talking about bad credit, we're actually dealing with two different things: personal credit and business credit. They're like apples and oranges. Business credit, it's more like a test score, 0 to 100. Here's the thing that most people don't realize. You could have a low personal score, but still qualify for certain types of business funding.
Wow, that's really helpful. So what options are actually available for someone with less than perfect credit?
How much time do we have? No, seriously, there are quite a few options. Let me share my favorites. First is the business line of credit. Think of it like a business credit card. You set a limit and you only pay interest on what you actually use. For someone just starting out or dealing with credit issues, this can be perfect.
Oh, okay. So like what kind of limits are we like talking about there then?
Typically anywhere from $10,000 to $250,000. Interest rates usually start around 8% and can go up to 24 depending on your situation. And here's a cool thing: as you pay it back, you can actually keep reusing it. I had a client who started with a $50,000 line, used $30,000 for inventory, paid it up in 3 months, and then had the full amount available again when a new opportunity came up.
That's fascinating. Are there any downsides people should like know about?
This is crucial. With these types of loans, you might be looking at a weekly or even daily payments instead of monthly. It's kind of like a subscription service versus buying something outright. You need to really be clear on how the payment structure works.
Wow. So I've also heard about like merchant cash advances. Can you like explain those a little bit?
Here's how it works. Let's say your business typically brings in $30,000 a month in credit card sales. Lender might give you up to $20,000 up front, and then they'll take a small percentage of your daily credit card sales until it's paid back.
Is there like a catch?
There's always a catch, right?
Yeah.
The main thing to watch out for is the cost. The fees can be pretty high compared to traditional loans, but what makes them attractive is that they adjust with your business. If you had a slow day, you pay less that day. If you're having a business, it's like having a business partner who shares the ups and downs with you.
Then now I have to ask about something I see like everywhere. SBA loans. Are those like really an option for people with credit issues?
Small Business Administration actually has several programs, and yes, some of them are more flexible than people think. Let me share a quick success story. I had a client, let's call her Maria, who had a credit score of about 580 after some personal health issues, and she had a solid business plan for her restaurant expansion.
What else happened with Maria then?
Qualify for an SBA microloan, which, by the way, can go up to $50,000. The key wasn't her credit scoring; it was her business plan and the fact that she had already been in business for 2 years. She got $35,000 to expand her kitchen equipment, and now she's doing 3 times the business that she was doing beforehand.
Incredible. So then what made the difference in her case?
Documentation. Sorry to sound like a real estate agent, but that's true. She came prepared with everything: tax returns, bank statements, profit and loss statements, even pictures of a restaurant at peak hours to show that there was a need for expansion. It's like going into a job interview. You want to bring your full portfolio, not just your resume.
So then I'm curious, what's like the biggest mistake you see people making when they're trying to get like business funding?
I haven't thought about this one in a while, but you know what I see all the time? People are mixing their personal and business finances. It's like trying to make a smoothie with everything in your fridge. Just because you can blend it all together doesn't mean you should.
Right.
But seriously, keeping these separate is crucial, even if you're just starting out. Lenders want to see exactly how your business is performing. If you've got personal groceries mixed in with your business inventory purchases, it's really hard to show them the true picture. Plus, it makes tax time a nightmare. Trust me, your account will thank you for keeping these things separate.
Well, what about like building credit for the future? Are there any like tips for that?
I tell this to everyone: get registered with the business credit bureaus. Get your DUNS number. It's free. It's like a business social security number. Then start with small vendor accounts that report to your credit bureaus. Even if it's just your office supply company, these small accounts matter.
How long does it typically take to build like good credit?
Well, it's not overnight. It's probably faster than you think. I've seen businesses make significant improvements in 6 to 12 months. The key is consistency. It's like going to the gym. You're not going to get fit once, right?
Right.
You need to make it a habit.
Well, okay. So before we wrap up, what's the one piece of advice you'd give to someone watching who's feeling like discouraged about their credit situation?
I've seen so many successful businesses start with less than perfect credit. The key is to start somewhere, even if it's small, and build from there.
That was really, really great advice. For everyone watching, where can they learn like more about this topic?
Check out our blogs at businessloans.com. There's so much free info and resources on there. Don't be afraid to talk to multiple lenders. It's like shopping for a car. You wouldn't go to just one dealership, right?